Everyone. Thanks for joining us today. My name is Adrian Peterson. I'm the lone dude, and I have an awesome co-host with me today, Jeff Sipes. Jeff, I'll let you introduce yourself.
Hey, everybody. Thanks so much for taking 30 minutes out of your busy schedule to join us. My name is Jeff Sipes. I own a company called Blue Water Credit. We help people improve their credit so they can get the best financing terms on their loans. So glad you can make it today.
Awesome. Thank you, Jeff. So I've had the pleasure and the honor of working with Jeff's company many years ago. I was going through a divorce, and they really helped me take my credit from the sewer to the bright lights of the city. So it took a little bit of time. I had a lot of issues on my credit, but I can personally speak firsthand as a testimonial to using Blue Water Credit. They worked with me well, and I've referred a lot of clients to them in the last few years. They have really helped people understand the ins and outs of credit and what you can and cannot do. So with that being said, we're going to try to keep this under about 35 minutes today. I'm going to keep this really quick. If you guys have questions or anything, please type them in the chat box. We will get to your questions, but probably towards the end. So it's going to be a lot of information we're going to get across here shortly. This will be recorded. So if you have someone else you want to show this to, we'd be more than happy to do that for you. So with that being said, Jeff, I'm going to let you take it away, my friend.
Awesome. Well, again, you guys, I know everyone's super busy. So the goal today is obviously to teach you guys about credit. I'm going to be going over some secret formulas about the credit scores that actually Adrian uses. They're called FICO scores. I'm going to give you tips on how to boost their credit score. I'm also going to talk about medical collection updates, and then 3 mistakes that we make on credit cards, and then also give you guys some free resources. So I'm going to share my screen, and then we'll get started. I'm going to pick on you now and then, Adrian, too, so that you can help me I'm the credit expert. I also need the mortgage expert awesome. To help out with this. So, so again, you guys buckle your seatbelts and hang on tight. We got an action-packed credit to talk for you today. So I'll tell you a little bit about our story. My journey started similar to Adrian's. My wife and I started Blue Water Credit in 2008 with a vision to love and value people by offering solutions, giving hope and guidance to people struggling with bad credit. I was our first client about 27 years ago, tried to start a business and failed miserably. My credit was literally so bad, I went into a bank to apply for a bank account, and they turned me down for a bank account, let alone a loan. So my scores were in the 400s. I had a ton of debt, practically a repossessed car, and I had to dig myself out of this financial mess. So I learned firsthand what it's like to have bad credit. And then over the last 15 years, we work with thousands of people. Most of our clients are trying to buy a house. That's kind of who we tend to gravitate to. So, and we just want to be a light, a resource, and a guide, right, for people trying to buy a house. Because Adrian, right now, with interest rates, I mean, how much can a credit score impact a loan payment?
Significantly, right now, I mean, it's the matter of on a let's say a $500,000 loan, the difference of a point in interest rate can cost you a few $100s a month, which translates to $3,000 to $4,000 a year times 10 years. You're talking $30,000-$40,000 difference of interest just with simply a point.
Yep. And for those of you that don't know me, this is a picture of my family. We've got 3 young kids. We're trying to save for college, and I know if I had an extra couple $100 a month, I could save in interest. I'd be putting that away for a college education. So over the past 15 years, we've actually been able to help over 14,000 people improve their credit. So we've literally seen everything you can imagine. A lot of identity theft cases, misreporting accounts, collection issues, repos, short sales, misreporting. You guys, literally, we've seen it all. So if you have a unique situation, or if you have a friend or family member struggling with something, feel free to contact us. We always do a free consultation. Appointments over the phone. It's about 15 minutes. So, and then in our industry, credit repair doesn't have a great reputation. So make sure if you guys ever hire a credit repair company, look them up online, find out what their reputation looks like on Yelp or Google. Make sure they're licensed and bonded as well. That's really important. Services we offer is credit repair. That's the removal of negative items from a credit report based on them being inaccurate, incomplete, or not verifiable. We also have a debt negotiation person on staff that used to work in the collection industry. So she was a manager for a collection agency. So she knows firsthand what collection agencies are trying to do. They're really trying to get information from us to use against us. And so we can negotiate a lot of these times, these collections to be deleted for credit and also get a reduced settlement. We also partnered with a consumer rights attorney. And so if you're a California resident and you have late payments on a credit card, there's a lot of laws that protect us, and we're getting our clients compensated for phone call harassment based on credit cards. We're also getting our clients compensated for identity theft cases. We have a client right now that's going to receive up to $200,000 in settlement for his identity being stolen. So very, very grateful for that. Now, Adrian, let's talk about credit scores on a home loan.
Yeah.
What are the minimum requirements for a credit score for a home loan? And then kind of where would you like to see someone to get a better rate in term?
Yeah, no, that's a great question. So you guys will hear a lot of different things about what you only need to qualify for a mortgage. So in reality, you need a 620 FICO score to do a conventional loan. You need a 640 score to do an FHA loan. Now, you definitely hear lenders who offer that 580 FHA loan, 580 score to do an FHA loan, but we set the barometer at 640 because I feel like, to get to a 640, is not the most difficult thing, but at the same time, I feel like it starts to push us to where we can start tipping near the 700s, things of that nature. So the higher your credit score, the more programs that are available to you, and obviously the lower your interest rates are. I mean, it's pretty black and white with that.
Awesome. Yeah, I read a recent article with MSN Magazine, and they said someone with good credit versus poor credit, they're on average paying about $300 to $350 more per month for the same things.
Yeah.
House, car, credit cards, pretty much if we have debt, if we have lower credit, it's just more expensive. The main reason because of the risk. And so FICO looks at your credit report. I'll go over the formula in a minute, but they're going to basically determine like, hey, if you're risky, they have to charge more to offset the fact that you might not pay back your loan. So, and then most people are looking at a site called Credit Karma. Credit Karma is one of those sites where almost everyone signed up for it. Adrian, when someone comes to you and they're like, hey, I already know my credit score, I'm on Credit Karma, how often does that score match yours?
I've never seen it match my score ever in all the years of doing loans. So
yeah, that's very common. Right. Yep. So you guys, I have Credit Karma. I'm not saying that don't have Credit Karma, but realize the credit scores that Credit Karma uses, I've seen them be 10 points off. I've seen them be over 100 points off. So they're not going to be accurate. So if you want to know your real credit score, Adrian's your loan dude. You want to get your credit pulled with him. What's that look like for you, Adrian? You basically just meet with them, do a credit app, and then you can pull credit?
Yeah, that's a great question. So we have a couple different ways we can meet with you guys, online, over the phone, in person. We will do a basic application for you guys, and then we will start with a soft check on your credit. So we start with that. We pull from all three bureaus, TransUnion, Equifax, and Experian. When we pull your credit, our credit that we pull is in real time up to the second, and it's from all three bureaus. And then we utilize the numerical middle score. So if you have a 700, a 680, and a 660, we utilize the score in the middle, which would be a 680. That dictates what interest rates are available and what programs are available to you as a consumer.
Perfect. Awesome. If you guys want to check your mortgage credit scores online, there's only one website. It's myfico.com. It is a soft pull, like Adrian said, so it won't hurt your credit, but you have to pay for it. If you want a one-time pull with no strings attached, it's $60. If you sign up for the credit monitoring, it's $30 a month. But that's the only website online where you can actually get your mortgage credit scores. All the other credit scores you see online are not accurate. Like I said, I've seen them be up over 100 points off. So if you want to know your scores, Adrian is your plan A, and plan B, you got to go to this website. Realize though, if you do go to the website, myfico.com, FICO has over 60 different versions of their credit score. So you're going to get 15 credit scores at myfico.com. There's going to be auto scores, credit card scores, personal finance scores, and mortgage scores. So make sure if you do go the route where you go to myfico.com, you're looking at the mortgage credit scores, because the other scores, even though they might be higher, those are not going to be the ones that Adrian's using for pre-approval. Next is credit score is separate from a credit report. So your credit score is your risk for the bank. The credit report is made up of all your personal information. So your name, address, date of birth, your accounts, if you have public records like a bankruptcy, that'll be on there. Every time you apply for a home loan or a credit card or car loan, that's called a hard inquiry. That reports for 2 years on your credit. So just realize that every credit report does not have a credit score. And credit score, like I said, determines your risk. And there are hundreds of credit scores out there. So if you're buying a house you got to make sure and look for the mortgage FICO score. So Adrian is your answer, or myfico.com. Now, FICO is the credit score used for 90% of lending. So whether it's a house, a car, credit card, and this is their basic formula, right? So they look at, for the past 7 to 10 years, have you paid accounts late? Is there a bankruptcy? Did it go to collection? Did it get charged off? Those are the most significant areas of your credit. It's about 175 points of your credit score, has to do with your payment history. Now, if you have mistakes or if you've fallen down financially before, these are areas that we can potentially help with. So we always do a free appointment for you. The next part of your credit is your debt. So FICO looks at your credit card limit versus the balance. That's the ratio. FICO does not like to see maxed out credit cards. I'll talk about that in a second. The third part is the age or history. FICO wants to look at your oldest account open, your newest account open, and then they look at an average age of all of your accounts. So you're going to be careful and not be opening new accounts frequently, because that will lower your score. And you never want to close your oldest account. And then the last two parts are 10%.
Real quick on that, Jeff. So what happens when someone, so I get this a lot, people thinking that they have cards that they haven't used in a couple of years, and these cards might be 10 years, 15 years old. And then what happens is they close down the account, they shut it out, they close it out, and then their score goes down. Why does that happen?
A couple of reasons. The credit score is like a recipe. And so if you have high balances on other accounts and you close it, you lose that off your credit. And then it also hurts your credit history, right? FICO loves to see the old credit card open. So your oldest credit card, you really want to protect that, because that's really going to help get you to the higher 700s or even 800 credit score. That's kind of like the promised land of credit. And so never close your oldest card, even if they make you mad. So you just got to take it on the chin. Make sure you use the card at least once every 6 months, because I've had a credit card close on me for lack of use. So great question, Adrian. And
so just stipulating with that, one thing is credit depth. When you guys buy a house, we specifically look for that you have two trade lines that you've had open for the last 24 months, and you don't have any 30-day lates in the last 12 months. So that's a real basic factor that we look for of credit depth when you're trying to buy a house. That's huge, Adrian. So a lot of people think that when you apply for a loan, they just look at your credit score. Right. What Adrian said was super important, right? You have to have at least a 12-month payment history on your accounts. Yep. 2 of them have to be open. Yep. And then the third piece is you can't have any lates in the last year, right? So correct. Those are kind of, I don't know if those are considered overlays, but those are additional things that banks require for loans. Correct. Real basic. All right, you guys, pretty excited about this slide. I literally spent about 3 hours going through a FICO simulator, and I went through hundreds of scenarios, and I found out kind of like a secret recipe for having the highest credit score. And so FICO wants you to have 2 to 4 credit cards. That's ideal, 2 to 4. Remember, if you have more than 4, that's okay. If you want to close one, never close your oldest credit card, okay? Next is your oldest credit card. FICO wants to see a 20+ year payment history. I'll talk about a secret in just a minute on how you can piggyback on someone else's payment history in just a moment. Your oldest loan, FICO likes to see an old loan on there, so old home loan, old car loan. FICO also looks at how many times you've applied for credit in the last 12 months. That's called a credit inquiry. FICO is looking at your newest account. They want to see your newest account has at least 6 payments on it. They're looking at the number of accounts with balances. Ideally, you want 4 accounts or less on your credit report with a balance. Total balances excluding mortgage, the lower the balances, the better. Under $1,000 is best. Payment history, like I said, that's 175 points of your score. So it's a huge number of accounts that went delinquent, how recent the delinquency, and how severe. Every account on your credit report has a rating from 1 to 9, kind of like when you went to school. An A was worth 4 points, a B was worth 3, and that's how they calculate your GPA. Well, all your accounts on your credit report have a 1 to 9. 1 is like getting an A on your report card. The 9 is like getting an F, right? So if you have a repo, a collection, a charge-off, or foreclosure, those accounts get classified with a 9, and those have a significant negative impact on your score. So past due accounts, if you accidentally let an account go past due, it will impact your score up to 40 points.
As soon as you find out it's past due, you obviously want to pay it as soon as possible. Paying it current will take 30 days to be reflected on your credit report, and you will see up to a 40-point increase just from paying the account past due to current. So that's a good way to do it. And then utilization, I'll talk more about this in a second, but your utilization is your credit card limit versus its balance. FICO loves to see you use 10% or less of your limit. So a $1,000 credit card, they want you to use between $10 and $100 on your credit card. So that's a 0 to 10% is going to be that sweet spot for you to have the highest possible score. And if this isn't very practical, your credit score is only important when it's important, right, Adrian? so
right.
If you're going to apply for a loan with Adrian, I would recommend getting your credit card balances below 10% about 30 to 45 days before you plan on Adrian checking your credit.
Perfect.
And lastly, bankruptcies, collections, and repos. That's about 80 points of your score. So obviously you don't want any of those accounts on there, but if they did happen, contact our office. We might be able to help with that.
Awesome.
All right. Let's talk about top 3 credit card mistakes. Adrian, I know you mentioned before we started this, you kind of wanted to know what we're seeing.
Yeah.
So we're seeing a lot of people that are coming to us now, and they're like, oh, I have a 30-day late or a 60-day late because I thought I set up auto payment and then I never checked. So if you guys are setting up auto payments, you got to verify they're going through. The good thing about paying on a credit card, if your payment is due today, let's say it's due on the 16th, and you check your bank and no payment went out, it's not going to show up on your credit report as a late payment for another 30 days. So you literally have 4 weeks, 28 days to fix that before it shows a 30-day late. So if you guys have auto pays, I would encourage you every month, you just want to verify the payments are getting sent. Second is maxing out a credit card. One maxed out card can drop your score by 40 points. And if you're going to apply for a loan, like Adrian said a minute ago, your credit score, literally a 40-point increase could save you hundreds of dollars a month or thousands of dollars a year or tens of thousands of dollars over the life of the loan.
Yep. And
then just like Adrian said a moment ago, is you don't want to close a credit card. You're going to hurt your history. It's going to hurt your utilization. And if you have less than 4 accounts on there, FICO does like to see about 6 accounts open, paid as agreed. So you could have 2 to 4 credit cards, a car loan, and a home. That's kind of a perfect mix.
Got it.
0 balance credit cards do not score as high as a small balance. And if you're not using a credit card, you also run the risk of the credit card closing on you. So make sure you're charging small amounts. Could be Starbucks. Could be a small charge on there. And then for those of you that pay your card off in full every month, that doesn't mean your credit report shows a 0 balance. Whatever shows on your credit card statement, whether you get it paper or online, is going to show on your credit report. So like I said, 30 to 45 days before you apply for your loan with Adrian, get your credit card limits below 10%. Try not to use them over 10% because you don't want that to report because it'll actually show for a total of 30 days. And then
one quick thing I wanted to just add on that is one problem I've seen with people having credit cards is when people are real anxious to try to boost their score. What I have had issues with people doing is they pay off their bills before they get the bills in the mail. And so then they don't have the ability to actually show the credit bureaus that they had a bill and paid a bill because it just keeps coming in at 0. So I remind people that let yourself get the actual bill before you pay it to whatever you're paying off on it.
That's a great point, Adrian. Yep. Because if you're paying it before the statement comes, every month it's showing up as 0. So it looks like there's no responsibility or no
activity on
transactions.
Correct.
Yep. And then if you have limited funds and multiple cards, we recommend using the debt snowball. That's where you pay off the smallest limit first. That's going to yield you the biggest credit score improvement. So say you have 5 credit cards, take your smallest limit first and work on paying that down. And then once that's paid off, you're going to go to your next smallest limit and the next smallest limit. So that will give you the biggest credit score improvement the fastest. Medical collection. So like I said in the beginning, I've been working in credit for about 15 years. This last 12 months, we've seen the biggest change I've seen since I've been in the industry. Medical collections now with a 0 balance no longer show up on a credit report. And then secondly, they added a second layer to that is a medical collection with a balance under $500 is no longer eligible to show up on credit. So if you have medical collections, you can pay them off. And prior to this law, they still reported for 7 years. But now, once you pay them off and they go to zero, they'll actually be removed from your credit. And your score could go up anywhere from 40 to 60 to 80 points if it's a recent collection.
That's
and
huge. Medical collections are the most, medical collections are the number one thing we see the most on people's credit.
Yep. And you said some loans do require medical collections to be paid off if they're a certain dollar amount.
So that's a new thing. So until recently, you could have, you'd have people who have injuries or surgeries or stuff, and so they have huge medical collections. Now it's $2,000. Anything over $2,000 when you guys are buying a house, the lender will typically require you to either pay off all those medical collections or have some kind of payment plan in process where you've already established 3 payments prior to that debt. And so that was never like that before. So medical collections have become a real big issue with buying a house now.
All right. Yeah. And then we do have a debt negotiator on staff that can help you with this. We can get a lot of times the account to be reduced, so you don't have to pay the full amount. So definitely contact us if you have questions about that. We're happy to help. Awesome. All right, let's talk about secrets to bumping the credit score. You could be added to someone's credit card. So if you have a significant other, spouse, family member, a parent, a sibling, you can have them add you to their credit card as an authorized user, and you inherit their entire payment history. So for instance, if I have a credit card with a 10-year payment history, a low balance, no late payments, I can add my spouse and that card shows on her credit. She's going to inherit the entire thing. So this is a huge thing you guys can do to improve your score. Second is, if you don't have any open accounts, we actually have multiple credit cards we can send you. One of them reports within 7 days of opening. And like Adrian said, though, there's going to be a seasoning period, right? Adrian, you want to talk about that real quick?
Yeah. So again, he's talking about a seasoning period. So we're looking for credit debt. So we're looking for the average home buyer to have at least 2 trade lines that have been open for 24 months that have 0 lates in the last 12 months. So starting a new credit card, that may help your score. That may do some credit. That may help you start credit depth. But coming out of the gates like that, if you guys don't have any credit at all, then we want to start you getting some credit. And so a really common thing that I've run into the last couple months is people telling me they like to use all cash. I don't like to use credit. Well, that's fine. But when you go to buy a house, that's not so fine. So we have often when we pull people's credit and we get no score, it just comes up NA. And that tells us, and then the FICOs tells us this has no scoring because we don't have enough information to enter our scoring model. And so it's very important if you guys don't have any credit to start somewhere. And sometimes you feel like my credit score is so bad, no one wants to give me a credit card. Well, guess what? You can always typically go to your bank, Wells Fargo, Golden One, Schools Credit Union, and they'll offer you a secured credit card where you pay them the money, and then they'll loan you your money back on the form of a credit card. And then every month when they send out your bill and you make a payment, they're going to report it to the bureaus. So after typically 3 to 4 months of doing this, you will start to generate a FICO score, even if you've had none before. So that's something that's a real kind of a get started. If you think your FICO's crap, that's a way we can get started on working on it yesterday, essentially.
Awesome. Obviously, I work with hundreds and hundreds of loan officers, and Adrian is spot on. He is so knowledgeable. That's why I love working with you, buddy. You always do what's right for your clients. All right, let's talk a little bit about settling accounts. So remember earlier I said collection agencies are looking to get information from you to use against you. So if you try to settle collections or accounts, be careful, right? If they find out you're trying to buy a house, or if you have money, they're not going to want to settle.
Correct.
So some of the negotiation tools, right? You don't have to verify your address. We definitely don't encourage, untruthful. You want to be truthful about things, but you don't have to give them answers, right? And this is also a service that we help. So we can negotiate settlements. Most credit cards are settling for 40 to 50 cents on the dollar now if it was charged off. Medical collections typically will settle. They won't usually do a settlement for the initial fee, but they will reduce interest and charges. And a lot of collections will do an agreement for deletion. And that means your credit score is going to go up when it's paid. If you don't get a deletion agreement, paying a collection will not improve your credit score. So just be aware of that.
That's great information.
Credit inquiries. So Adrian said earlier, he does a soft credit pull. That's a great, great tool. Most lenders don't have that option. A soft inquiry is going to do 2 things. You're going to know real time, like Adrian said, what your scores are, and he can work on your pre-approval. And it's not going to show up as a hard inquiry, which could lower your score 1 to 5 points. And then the second is promotional. If you guys get credit cards in the mail, they do a promotional inquiry that doesn't impact your score. Promotional inquiries are for like soliciting you for business.
Got it.
And then a hard inquiry, that's if you apply for a home, car, credit card, student, school loan. That's a hard inquiry and impacts the score up to 5 points. It's going to hurt your credit score for about 12 months. Now, there is a 30-day window to rate shop. So if you had another loan officer pull your credit, Adrian can literally pull your credit within 30 days. That's going to have no negative impact on your credit score. So that's good news.
Correct.
Some quick updates. I know we're getting tight on time, and I want to answer any questions you guys have. So federal school loan update. Federal school loan payments are going to begin roughly July 1st. There is some potential to get debt forgiven that's still tied up in litigation, up to $20,000, $10,000 in non-Pell grants, and $10,000 in Pell grants. Income requirements are, there are some income requirements on that. So if you guys have issues with school loans, that is a service that we can help with. Call our office. We'll do a free consultation.
Awesome.
This is a pretty cool thing, Adrian. We talked about this before. Because of COVID, they made a few changes to credit. This is one of them. We can have access to our annual credit report. Instead of once a year, we get it once a week. So you guys can go to annualcreditreport.com, check your credit every week. It's a soft credit pull. Now, this credit report does not have a credit score. So if you want a credit score, you got to go to my FICO or Adrian. If you want a credit report, this is the best credit report out there. It's going to tell you when your collections are falling off. It's going to give you more details than any other credit report. So it's a great resource for you. Identity theft, we are seeing an uptick in it. If you guys have any issues with ID theft, we can help you with that. Put a fraud alert, credit freeze. You want to get a police report, and then we have a fraud affidavit. We're successful in getting that removed about 80 or 90% of the time within 45 days. If it doesn't get fixed within 45 days, we refer you to our law firm, and this is where you guys can be compensated up to $30,000 per account. And so there's a big penalty for creditors not updating these things. And we just have to dot all the I's and cross the T's so that you can be eligible for the financial compensation. Awesome. Best clients for credit repair, people that are motivated to improve their credit, typically for buying a house. Set up a free consultation. Due to time, I won't go into many details, but contact our office or Adrian can give you our information. You can go to our website. It's bluewatercredit.com. We have a ton of free resources there. You guys can download an ebook. We have how to get 30 points in 30 days. We've got over 250 blog articles you guys can read, and they're all written by our blogger. And other than that, I'm just going to open it up for some questions. I know we wanted to wrap it up in about 35 minutes. So Adrian, did you have anything, or did you want just to open it up for some questions?
Yeah, I'm going to add a couple quick things here, and then we'll get to some questions. So let's see here. I'm going to turn my screen on. And so I just want to touch on two quick things here. The first thing is timeshares, because timeshares have become really popular with everyone in the world. Timeshares recently changed. So until this last year, if you had any derogatory items on a timeshare, we treated it just like a mortgage. So if you were in default or anything, again, we treated it just like a mortgage, meaning you had to wait those timelines to be able to apply for a mortgage. Now, timeshares, as of this last year, are being treated as an installment or consumer debt. So just like a car loan or a personal loan, anything like that. So if you have any late payments, if there's a foreclosure, deed in lieu of short sale, anything like that, we are going to treat it like an open collection. And so that's very new and very different. So if you have a timeshare and you haven't been paying on it or anything, like I said, talk to me and we'll figure out how we can stop the bleeding on something like that. All right. And then I'll refer you over to Jeff. They can look at essentially closing that out, killing it off, doing something, because a lot of times what happens is people walk away from these things. Guess what? They keep charging you. It's still attached to you. It's just like a car loan. Okay. And then the second thing I wanted to touch on here, let me see, how do I get this? Let's see. Next thing I wanted to touch on here was waiting periods. So this is a very common question. What happens after I have a BK or a foreclosure or short sale? If you have a short sale, the soonest you can buy a house is typically 3 years. So it's 3 years in a day from the date that your short sale was finished and completed. Not when it started, but when it finished. If you've had a foreclosure, then a foreclosure with an FHA loan is 3 years. So 3 years in a day from your foreclosure date, you can get an FHA loan. So I typically tell people, if you had a foreclosure or short sale, it's 3 years. If you've had a bankruptcy, a Chapter 7, then it's 2 years. Okay, so those are kind of They don't go across every single loan, but that's kind of standard for the industry of what that does and doesn't do for you. Okay. So I'll leave it with that. And then we'll leave this open. Now I'm going to take does anyone have any questions? And so let me do that. Let me see if there's any questions here. Any questions? Anyone have any questions about their specific scenarios or anything? All right. Not seeing anything that's coming back right away. So I'll leave us with this. So Jeff has put his website address up on there, Blue Water Credit. And then I also put up some of the links he was referring to, like myfico.com and the annualcreditreport.com. So if you guys have any interest on accessing and utilizing those things. Oh, I have someone here who has a question. What's your question, Richard? Richard. He's raising his hand to speak, but I wasn't getting anything back. All right. So if anyone have any questions, sorry if we weren't getting to those. All right, guys. Well, thank you guys for joining us today. I really appreciate that. Thank you, Jeff, for being on here. You're awesome. If you guys have any questions, please circle back to me or Jeff if there's questions. We'd be very happy to answer. Thank you, guys. Have a fantastic day.